So this is really
yes.
a juicy question, right? That probably everybody wants to know.
Yes. How to make your company higher, more valuable, you know?
Yeah, exactly, right. So I would break this down into two categories, right? Two categories. One category would be I would put, say, the mature large companies, right? The stable companies into one category. The companies that have been, operating for a really long time or even listed on the stock exchange as one category. And then the other category, I would call them the early or the early stage companies or the small business. Okay. Now, first, let's start with the easier one, right? The large companies. How do you create value? How do you create more value for large listed companies? Now, a lot of it, happens to be very predicated on the status quo, right? Which basically means that, investors want to take comfort in the fact that the company will continue on its trajectory for the foreseeable period or to perpetuity, right? Forever, right? It will continue to maintain its growth, which is going to be largely driven by the overall macroeconomic situation, right? So, say for example, if Malaysia's GDP or Southeast Asia's, economy is expected to grow at, say, 4 to 5% a year, one would expect that a large company, right, operating in Southeast Asia would, maintain the growth on the same pace as the economy, right? Maybe give or take 1% or something, right? And that is important because at the end of the day, that translates to earnings, right? Because it's a stable company, it's a large company, it's likely, 100%, I think, to be profitable. So this translates to earnings, which are important to shareholders, right? And shareholders will ultimately be receiving dividends from these earnings. So that value, that ability to, to preserve value or increase the value, is a lot of it will be dependent on the ability of the company to continue paying its dividends, generating that, that level of earnings. Or even better, right? Even better if there is some, there's some catalyst for growth. For example, a company decides to expand into new markets or, venture into building a new product, right? So those kind of events, those kind of initiatives for large companies will be what I say the trigger to unlock additional value, right? But and again, for big companies, while we always talk about increasing sales, and unlocking value through new initiatives, like it or not, a lot of big companies will also face problems in terms of efficient management, efficient not only in terms of leadership, but also in terms of cost, your quality of product and services, right? We all know that, for example, your favorite Penang Hokkien Mee in the street is the best in Malaysia. But imagine you put that in a big company, right? And then you start franchising it, you want to scale it up, you inject steroids and then you make it very big, right? You try to scale it up, right? Unfortunately, I mean, on paper you can do the math and everything, it works out nicely. But in reality, the moment you start institutionalizing a business like that, things can get a bit different, right? So that's when things start to break, and the ability for the company to really preserve that culture of innovation, it has to be very strong. So one company that I think has been fairly successful in doing this is Apple, right? I mean, recession or not, I don't know. I mean, but if you look at the Apple stores, people are still queuing to buy Apple products, right? So companies with a strong culture of innovation and very institutionalized management will tend to benefit and have a higher value in the long term, right? So this is for the large companies. Now, on the other hand, for small and early stage businesses, and I speak from a bit of experience because at IJK we get a lot of inquiries for companies that are looking for funding, and we do a bit of advisory work as well. And a lot of them have visions for expanding. And that is very commendable, that we see a lot of these entrepreneurs coming out, doing something on their own, trying to get funding from the debt and equity markets. But, what is really important for companies which are, still in the very early stage of growth, or smaller companies, is really comes down to two things, right? So one is sales, and then the other thing is earnings sustainability, right? So why I say this is important, too many companies actually go and speak to investors too early, right? And try to sell them their idea without really having any revenues. Now, without revenues, it really means that there is no proven market, right? And there's no way that anyone out there can get comfort that your business will be around for the foreseeable period, 5 years, 3 years, So for these companies that maybe don't really have any revenue, pre-revenue stage, I would really advise them to really focus. Valuation is something important. I mean, unlocking value, we talk about this, but I think what is important is to really focus on building a prototype up, try to get in that dollar of that first dollar of customer revenue, because at the end of the day, revenue is the first and foremost the most important thing to talk about when you are having a valuation discussion. So without revenue, right, there isn't any point in talking about valuation, right? So that is the important thing. Now, the other thing that is important is earnings sustainability. So what do I mean by earnings sustainability? It basically means that eventually at some point of time, if you're a startup company, if you're a small company, you need to break even, right? You cannot keep losing money because investors are just going to get pissed off, right? So you have to be profitable. And at the same time, once you turn profitable, you need to make sure that you are able to generate that level of earnings for a foreseeable time, right? Because volatility is not good for valuation, it's not good for investors. Volatility in earnings, the lack of visibility in earnings translates to risk, right? So if the risk is high, then valuation will be low. So a lot of investors, VC funds, private equity funds, or even corporate investors, they like to look at a company that really has sustainable earnings, right? And it has a proven product, sustainable earnings, and has been around for some time, so that they know that you don't go bankrupt overnight, right? So that's why I say, going back to my first point, right? This pandemic situation, a lot of companies having a lot of trouble, right? So if all of you guys can stay and survive, right, by end of the year, right, that in itself already says a lot about value, right? It says a lot about your cash flow, your ability of your company to be very disciplined when it comes to cost, very disciplined when it comes to managing your cash flow. And also, it also shows that your customers are there with you, right, to weather through this period of very great uncertainty, right? So that is about earning sustainability. Yeah.
Interesting. Yes.